What's up, guys? Welcome back to ProMG Money. And today we've got a special video for you. Today I'll be speaking about unit trusts. And just to quickly explain what a unit trust is actually. So unit trust is essentially, it's a fund, right? Where a particular fund manager then takes a group of companies or some kind of holdings, because it can be companies, it can be futures, it can be bonds, whatever the case might be. They take a group of those things and they put them together, and you then invest or you contribute towards the fund, and then all of the fund contributions are then invested into those specific what's the right word, equities, I guess. Yeah, they all put into those respective equities. So that is essentially what a unit trust is. It's very similar to something called an ETF, which is an exchange traded fund. So that is then now where they take a bunch of companies, or they group a bunch of companies together and you invest in that. But the difference with an exchange traded fund or an ETF to a unit trust is that a unit trust is managed, meaning that there's someone who's actively every day opening, looking at each company, how they're performing, buying, selling. So you're essentially just allowing someone to trade on your behalf, not even to trade, to invest on your behalf. That is a unit trust, whereas an ETF is just run by the market. So if Facebook goes up, it goes up with Facebook. If Facebook goes down, it goes down. There's no one actively managing that. If you're in or invested in that ETF, you're going to take it as it is. But with an actively managed fund like this, when things are good, you know, they'll be pushing that company up. But when things are bad, they'll more likely than not maybe cut their losses in that company and try to reinvest elsewhere. So, you know, just to look, there's this article that we have here that actually goes over the top performing unit trusts of 2019. And the first one is the Old Mutual Gold Fund, Investec, Sim Resources. And I mean, if you look at the return of over 68%, that is a really, really good return. But this is now obviously, I think, over a period of 10 years. So that means in 10 years, if you gave them 100 Rand, they would give you back 168 Rand for this Old Mutual Gold Fund, which I think is a really good return. Go look at any savings account or anything like that. You won't get a return like that. So this list over here is really good for long-term unit trust investing. This return is really, really quite good. It beats the market at a really good rate. So I think that's not a bad thing to do long-term. But short-term, there's a few others that we're going to be looking at. These are just some of the top ones that I've found. I don't think that they are the best, but most of them are quite good. But yeah, we're going to get into them. So the first one that we're going to look at today is the Old Mutual Gold Fund. Now, this is something personally that I am invested in, or this is a unit trust that I have a holding in, purely because it did so well last year. If you actually look here, it actually says over 1 year, this fund has grown by about 80%, which is really good. Back to the 100 Rand example, if you put 100 Rand at the beginning of 2019, by the end, you would have gotten 180 Rand, which is an amazing return, I think. The only problem with the Old Mutual Gold Fund is that it's based on gold companies. If you actually look at the top 5 holdings, it's Anglo Gold, Gold Fields, Harmony, Newton Mining, and Barrick Gold. I'm not sure about those last two, but I mean, if you look at over 40% of the fund is in Anglo Gold. So essentially, you're heavily into Anglo Gold, Gold Fields, Harmony, which are gold mining companies, which do well when gold is doing well, but do bad when the price of gold is not doing so great. So right now, with all of the uncertainty in the markets and times not being so good, gold is at an all-time high, the actual price of gold, and therefore these companies are doing really well. That's why there's a growth of 80% on a unit trust, which is almost unheard of over a year. So yeah, that's what I'm invested in, and you'll see here where it actually shows you how it's beating worldwide equity, significantly so, almost on all of the metrics, 3 months, 6 months, over a year. Currently, this is the darling of unit trusts right now. You don't get anything better than this right now. Yeah, I think it's quite a good thing to hold on to long term, but I also know and understand that the gains that it's had over the last year or so has to do with the uncertainty with the market. So yeah, that's that. Go. Next, we've got the Anchor BCI ACPI Global Balanced Feeder Fund. Lots of words. 23% over the last year. Really good again. Outperforming everything except for this 3 months. It's not been doing so well in the last 3 months maybe. And I mean, even if you look on this chart, there was like a really high there, and then our friend Rona came in and sort of dashed this fund, but it's slowly but it's actually even past the point of where it once was. So I think it's doing quite well right now. This is actually managed by a company called Boutique Collective Investments. Yeah, that's all you need to know. The first one was obviously Old Mutual, so I didn't really go into that. And yeah, the fund itself, so we actually don't get a clear indication as to what it's in. You just have this single holding here, which shows you it's probably offshore equity, meaning that it's companies from overseas. But when we actually go over to the fund report, or what do they call this document? The minimum disclosure document, yeah, where they pretty much go over the complete fund. They basically tell you that their top 10 holdings is Alibaba, Amazon, Etsy, Facebook, that company that I don't know, Netflix, Spotify, Tencent, and Wix. So essentially, this is just a grouping of American companies, well, maybe not American, because C is from Singapore, Tencent is a Chinese company, Alibaba as well, Chinese company. So it's essentially a mixture of different companies that they're invested in, and it's essentially, yeah, like I said, someone else pretty much choosing what to invest in for you or on behalf of the fund. So this one, it's really good. I would definitely get into this. It's just that for the returns that you're getting, you'd much rather be in these companies yourself. Personally, for me, I think I can do a much better job than what these guys are doing. But again, unit trusts are for people who are lazy, who don't really want to get into this for themselves. So for that reason, yeah. Next, we've got the Resco Global Flexible Feeder Fund, which again, over the last year, it's done 27%, which is, again, very, very good. I think they've also pretty much been consistent throughout. Yeah, the actual fund is managed by Resco Collective Investments Limited, which probably means you can invest in them as well because they're a limited company. And yeah, let's go over to the fund details or the fact sheet. And with this one, what you'll see here is there's a whole lot of these things, and I should probably leave a link to all of these in the description. So I will try to leave a link to all of these funds in the description. But here, basically, what you'll see is that their top 10 shareholdings, which is this section over here. They've got a few US Treasury notes, which are essentially bonds. There's a gold issuer. I'm not quite sure what that is. They're invested in an ETF, and then you'll see the specific companies they've chosen is Pan African Resources, Discovery Limited, African Rhodium ETF. So essentially what I'm getting from this is that this is a fund that is more into the bond market more than anything. You'll actually see their asset allocation just above here, that they've got 12% in equity, nothing in property, almost about 8% in commodities, 37% in bonds, and about 42% in the money market. So it's a nice even spread of the market. You get a piece of everything, which I think is quite good in terms of diversification. You look at some of the things that they're in these treasury notes, some of the shares, Discovery, they've got a pretty good spread of coverage of everything. So I would definitely look at this. This is a better one for a bit of diversification. They aren't in the usual companies that I would invest in as per se. So I think it's actually quite a good unit trust to be in. Just not something that I would consider doing. All right, next we've got the One Invest Global Government Bond Index Feeder Fund. And there's a word there that should immediately just be telling you what this is, or two words, which is, okay, the first word is bond, meaning that they focus on the bond market. And the second word is government. So you know that this is basically a bond unit trust, which over the last year, 20%, again, really good. If you look over the last 6 months, it's actually up about 23%, which is really, really good. Yeah, it's managed by Stanlib. So I'm sure you've heard of Stanlib. It's one of these finance companies that, do all of these investment and whatnot. It's, those wealth things. So that is Stanlib. And let's actually look at what they've got in here. And here, what you'll see is that they've got a treasury note, a treasury note, treasury note. So these are all essentially government bonds. And they actually show you, with this one, fortunately, the different types of or countries where they actually are getting these from. So it's heavily United States or US bonds. There's Japanese bonds, French, Italy, Germany. And if you don't know what a bond is essentially how the government tries to raise money by saying they'll pay you in X amount of time, and for that reason you give them the money, and while they're busy paying you off. And okay, we'll just get into bonds at a different time because this is not a video about bonds, but this is actually one of the unit trusts I'm actually thinking of getting because of its exposure to the bond market. In my current portfolio, there isn't much exposure to this. I am in other things. I'm in a lot of equities. I've got REITs that I've invested in, but there's nothing from the bond market. So this is actually something I've been looking at quite closely, and I've been tracking quite closely. And probably within the next few months, I'll probably take up this unit trust, because the nice thing about these unit trusts a lot of the time is that you just need to give them about 500 Rand a month and you'll be earning part of the unit trust. So I'm definitely going to be putting more money into this, or starting to put money into this, because I need exposure to the bond market. This is an easy way to get it, because other than this, it's a bit tricky to actually get involved in the bond market. And notice how there's no South African bonds here. Which clearly shows you the confidence that this company has in South Africa. And the number 5 fund we're going to look at is IP Global Momentum Equity Fund. This again is a fund, as the other ones were, with almost 79% growth over the last year, which is massive. And this again is linked with not linked, but it's similar to the Old Mutual Gold Fund, which in terms of performance is doing really well. And this one, you can see their top 5 holdings is Shopify, MasterCard, Microsoft, C Singapore, and Amazon. And what you need to know about all of these is that this is basically around tech and e-commerce. That's why the fund is doing so well. I haven't actually read the documents to see what they say they are trying to do, but just on their top holdings, Shopify, they're almost 10% into Shopify. If you don't know what Shopify is sort of like an e-commerce platform where you can sort of start out and open up your online shop and start selling things that way. So Shopify has done pretty well, particularly through this lockdown, with brick and mortar stores closing, particularly in America. It's actually pushed the emphasis of a need for an e-commerce type of setup where people sell things online rather than in person. We've got MasterCard, which is a payment provider. Microsoft, we're invested in Microsoft. We know a lot about them. C Singer is actually a Singaporean company. Not quite sure what they do, but there's a few unit trusts that are involved in this. So it's something I definitely need to look into. And Amazon, we all know about Amazon. Their main business actually isn't selling things to you. It's actually AWS, or maybe not their main business. I think their main business is still in sales and e-commerce, but a really big part of their business is AWS, which is Amazon Web Services, and that has to do with a whole plethora of things. But just know all the servers, all the websites you access, things like Netflix, they're all hosted on AWS. So Amazon, really good and big company. It's probably outperforming everything. If you look at the company, it's IP management company. No idea what company that is. And yeah, that's basically that on IP Global Momentum Equity Fund. Now, I was going to go through 10 companies, but I think in the 5 that we've gone through, we've pretty much exhausted our time for this week. So maybe I'll come up with a part 2 sometime later this week. But essentially, what you need to know about unit trusts, or my thoughts on unit trust, is that they shouldn't be your primary asset class, or your primary unit, or the primary thing in your investment portfolio. I think it works really well as part of a bigger investment portfolio, sort of just to help you get a better range of the market. Because with what we're trying to do, we're trying to look at individual companies and, you know, just invest in them, but keeping in mind as well that there's risk associated with what we're doing, that one company can go bust, but in a unit trust there's someone who's managing the allocation of the companies, or how much you have in these companies. And I think another thing to note with unit trust is that there's normally an annual fee that's being paid to the fund managers, which is maybe the one part that I'm not the biggest fan of, that you know, someone is going out there and they're picking Spotify, they're picking MasterCard for you using your money, and when it does well they get a fee, when it does badly they still get a fee, and that fee is non-negotiable. You're always going to get the fee no matter what happens. Some of them will obviously have a performance fee to say if they reach goal XYZ, then their fee increases, but a lot of the time it's just a fixed fee that they get no matter what happens, which seems like a small percentage when you initially look at it. But I mean, on a losing position where you might lose over like 30, 40, 50% of your money, someone still takes their fee before anything else happens, which I don't think is fair personally. That's why for me, unit trusts, like I said, good to have in your portfolio, but it shouldn't be the be all and the end all. The only thing that I'd suggest a unit trust for is if you're too lazy to invest yourself, because really this takes all of the hassle of having to go research companies, looking what's good, what's bad. You literally are putting it in the hands of someone else who's generally backed by a whole company of people and analysts who are looking at this every day. So I think it's a really good bet. I think if someone wants to start getting into investments and they really have no idea what to do, this is what you should be involved in. I think most financial advisors that you go to visit will probably first put you into a unit trust before they put you into anything else. And I agree with them. Unit trusts are an easy way to make your money work for you. Even if you have a lump sum, you know, if you ever get inheritance or anything like that, you know, go over the unit trust, look at something that's done pretty well over the years. That initial Old Mutual global fund I spoke about. You know, if you take your lump sum of your inheritance or your lotto winnings or whatever it is, dump it in there, I'm telling you, your money will grow. Don't expect it to be crazy exponential like this IP Global Momentum Equity Fund or the Old Mutual Gold Fund. It will never do that. These are just two funds that are doing really well right now, but you shouldn't expect these kind of returns year on year, because it's really not realistic. And yeah, that's all I have to say for today. There will be a part 2 of this video where we look at another 5 ETFs, and maybe there'll be a part 3 where we look at maybe some of the bad performing ETFs in South Africa. But I think for now, that's that. It's been your boy, Pro MG Money. See ya. Don't forget to subscribe, like. Don't forget, end of September, 5,000 subs. I'm giving 2 people 5,000 Rand each to use towards their investment journey. And I mean, if you're lazy, tell me to put it in a unit trust for you. I will literally take 5K, transfer it into a unit trust for you, no worries. And as well, the goal at the end of the year, 50,000 subscribers, 50,000 Rand going out to a single person. I wish there was a way I could show you that I've got this cash on hand ready to go. But yeah, regardless, all you need to know is that end of the year, 50K subscribers, 50K goes out to you guys. End of September, 5K subscribers, 2 people will be getting that 5K if we get there. See ya.
The money that I want.